Yeah guys, so I thought I would just hop on very quickly and go through something I'm testing a fair bit. I don't really have solid rules around it yet, but it's something that seems to happen quite a lot. Might be valuable for you guys to sort of add in to your thing, and it's I mean, for want of a better word, it's intraday pricing theory, right? So it's the theory of premium and discount to do with London Open mainly, right? The sort of London Kill Zone and pre London and London Open, right? So today's a great example, right? Right. So if we take the last 15-minute leg of price, essentially, right, we have this to this. This is our last real 15M range, right? We're contained within this high and this low at this point in time, right? So London Open comes, right? Just well, Frankfurt Open, London Open, whatever. Start of the European session, right? Comes around here, right? Now price is low, right? Like it's in the discount of this leg. Does it now make sense for price to continue that bearish intent? Not so much, right? Now it makes sense to buy up to a premium and then potentially follow this structural leg, right? We'll obviously see how it plays out, but just around the open, shorts don't really make sense, right? If we look at this leg here, right? We can say this is our last little 15-minute push. We're like, when we come to the open, we're contained within this high and this low. And this is the stuff I'm trying to get rules around, all of this stuff, like what legs to use, stuff like that. But it's just something interesting that you guys can test out, right? Again, the open comes, right? Frankfurt European Open comes, and we're high in the leg. So what are we likely to do? Continue to run the high or push lower, right? Take out liquidity, move high, right? Again, like I'm going to show you the ones that work, obviously, because they don't all work like anything in trading. Where's another nice one? No, this just melted from here. Here again, right? This, we can take either this or this as our last 15-minute leg, but essentially we have this to here. Right, price is relatively low in the leg, we get an explosion to the upside, right? Again, over here, right, we can say that this is our last 15-minute leg, right? So we've got this to this range, right? Start of the European session, price comes down into a discount, moves high, right? Where's another one? Here, London Open trades. London Open is fairly low. Right, down here, so we get a push back up into premium, then we get a continuation lower. Right, where else? Here. Right, we can say that we're contained within this leg of price here. Right, this is our last real 15M push. Right, start of the European session, price is trading at a discount, price moves high, right? Again, over here, right? We can really say this is our last 15-minute leg, I suppose. Right, or this. This is the stuff you need to figure out for yourselves, because I still don't have rules around it. It's a lot of the time it's by feel sort of thing, but yeah. But we can see that price is trading at a premium, right? Trades down to a discount, explodes high, right? Again, over here, right? You know, price is contained within this and this leg of price, right? London Frankfurt opens, we're trading at a discount, we move higher to a premium, we sell off, right? Again here, right? Yeah, this is our last 15-minute push, I suppose. Price is trading relatively low, we get a push to the upside from discount. We can even say this, you know, but this is very much stuff that you have to find rules for yourself around, right? This is just a quick sort of overview of what happens, right? Price comes in, trades lower, right, into this, comes higher into premium, continues to the downside, right? I'm not sure this one works so much. They don't all work. It's like anything in trading, right? It's never going to work 100% of the time. No, that just misses the premium there. Here, right, here's our last 15-minute push. Right, price starts at a premium, sells off, comes back, sells off, comes back, sells off to a discount. We get a huge continuation high. Right, here again, this is our last 15-minute push, really. Oh, wrong thing. Right, so we get a little, we're in premium, we get a little sell-off to discount where we get a continuation higher to premium, we get a pullback to discount, we get a continuation high. Right here, this is our last 15M push. Right, I mean, whatever you want to count it as, you know, this is very much something you have to set rules around. I don't have any set rules yet. If I do find something concrete, I will very much inform you. But yeah, again, like price, you know, start of the European session, price is low, so we get a continuation up to premium, we get a sell-off, we get a continuation. Right, here again, we can say like this is our last 15M push. Right, price is trading at a premium, we get a sell to discount, we get a continuation high. Right, you know, here, like what, this is our last 15M push. I mean, this is messy, but yeah, something like that is our last 15M push. Right, start of the European session, we're low, we get a push up, then we get a push down, then we get a continued push back up. And you can align this with like EOF, stuff like that, to try and get more better structural ideas and ideas for what you want to be looking at come the open, right? Do I, you know, does it make sense to sell from here, etc., 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 right? Like here, you know, does it, yeah, okay, we're bearish, but does it make sense to sell this low? No, right? Look what happens, we buy, right? And yeah, it's just, it's stuff you have to, it's just something to investigate, but it seems to be to do with 15M ranges, and yeah, the start of the European session mainly. I'm sure it would work around like New York as well. I haven't really tested that, but yeah, hope that helps a little bit. I find it, you know, if you add it into all your whole story stuff, right, you start getting some even more probabilistic trades. So yeah, enjoy guys, take it easy.